I'd like to thank the Center for Financial Inclusion at Accion for putting together such a tremendous event and for inviting me to spend just a few minutes sharing some of my thoughts. I'm going to start with a very bold statement. I believe that financial inclusion for all is not only possible by 2020, I think it's inevitable. In fact, I believe that there is more potential for innovation in money over the next 7 years than the last 30 years. If you think that's far-fetched, just think about your smartphone. That's about 7 years old, and think about the profound impact it's had on your life. By 2020, I believe we'll see a profound and fundamental shift in every aspect of how people and businesses manage, spend, and borrow money. Why do I believe this? Because other than the widespread adoption of the internet over a decade ago, payments and financial services innovation has been based primarily on incremental innovation. Now is the time to move from the current period of incremental innovation to a period of disruptive innovation. There are a number of macro trends that form the basis of this disruptive innovation, and I'd like to speak to just 5 of them today. The first, and you've heard a lot about this over the course of the past 2 days, and most obvious, is that people are now always connected with each other using their mobile devices. This is the basis of the greatest degree of access to information, communication, and interaction we have ever had. And it will enable entirely new forms of commerce. The second important macro trend is that platforms that process transactions and just make things happen, which have historically been very monolithic and closed, are opening up. They're connecting with one another and they're interoperating. And I think this also will allow us entirely new forms of commerce. The third macro trend is the increasing sources and uses of data about consumer identity, experiences, and preferences. We're getting this data from a number of different places: devices, back-end systems, social networks, and more. Again, this will enable new forms of commerce. The fourth macro trend is that we are now working with enabled consumers as important participants in the product development process. This iteration with consumers allows us to create better products and will allow those products to scale very fast. The last macro trend that I want to point out, and again, I think there are a lot of these, is that the cost of innovation and the cost of products and services has dropped and will continue to drop dramatically. Both traditional and non-traditional players can now innovate very quickly and very cheaply, and they're incorporating a wide variety of supplemental services, like marketing services, into their products and services to help reduce costs. And I think we'll see that those savings are passed on to consumers. The confluence of these 5 and other macro trends has resulted in 2 things. The first is completely redefining commerce. Until recently, our dialogue has led with payment transactions or the need for financial inclusion. I think we're moving into an environment where the value propositions of new commerce are increasingly more relevant in leading that dialogue. And let me explain with one example. I live in New York City. If I took a cab before 2007, I only had one way that I could pay, and that was with cash. Starting in 2008, the whole notion of mobility resulted in the installation of POS, point-of-sale terminals in cars, and I was able to start paying with a credit card. That's an example of incremental innovation. Since 2012, there's been a new service introduced in New York City by a company called Uber. I can hail a car anywhere I am using an app on my phone. I can track that car using GPS on my phone. I get in the car. Once I'm done with my ride, I simply get out of the car with no in-person payment transaction. That payment transaction has happened in the cloud. That is an example of redefined commerce resulting in disruptive innovation. The second implication of these macro trends is that they've created an environment of innovation, engagement, and excitement for everyone. Large and small companies, banks, processors, networks, startups, and more are all working hard, deploying investment capital, and figuring out how to change the world of payments and financial services. And they are really passionate about it. And it is with that kind of passion that you truly create profound change. To bring together this worldwide community of innovators, after being a venture capital-backed CEO for almost 15 years, I created a global in-person event that Susy mentioned called Money 2020. And the goal of Money 2020 was to be more than just a trade show or conference. It was to really be a catalyst for the growth and development of the ecosystem. I've literally just in the last 2 weeks or so come from Money 2020's 2013 event, which was our second event held in Las Vegas. And we had over 4,200 innovators, including 438 CEOs from 1,600 companies and 50 countries. This was the world's largest gathering of innovators in payments and financial services. Those specific people focused on innovation in their organizations. And at Money 2020, it was clear that there is a movement that can turn the current state of financial inclusion on its head. That is why I believe that financial inclusion for all by 2020 is not only a possibility, it is inevitable. We at Money 2020 are committed to partnering with the FI2020 initiative and all of you to help achieve that goal. So stay tuned for more. As Susy mentioned, join us in Las Vegas in November of 2014. And if you'd like more information, there is a brochure outside. Thank you very much.
Thank you. Thank you, Anil Aggarwal. And we're really excited about partnering with Money 2020 moving forward. And we've enjoyed the Money 2020 songs we've heard and watched being danced to. So, Carlos López-Moctezuma, please.
Thank you, Susy, and thanks to the Center for Financial Inclusion for the invitation to this event. And I would like to share some ideas about financial inclusion in the perspective of a global financial conglomerate as BBVA. And I would like to start this by citing a phrase by Albert Einstein that I always remember when I think about how to overcome financial inclusion challenges. We cannot solve problems by using the same kind of thinking we used when we created them. In terms of financial inclusion, we think that we can use traditional banking tools for increasing the penetration of our financial systems. Therefore, we have to change our mindset. In BBVA, we believe that the fight against financial exclusion is a goal consistent not only with our ethical and social commitment, but also with our medium and long-term business goals. Therefore, we committed to developing modern, innovative retail banking that would ensure safety, proximity, availability, time saving, and convenience, and that offered low-cost alternatives to millions of people. Our vision is by the year 2020, all people in need of financial services will be able to get them in a convenient way and at an accessible price. A future where all major financial institutions have developed long-term strategies for the unbanked, but not just because of social responsibility, but because these new models will represent profitable businesses. If we can have a solid financial inclusion infrastructure inside each and every major financial institution, we see a future where the lowest income people can take advantage of financial opportunities, going beyond payments and exploiting the full potential of savings, insurance, or credit products to accomplish their financial dreams. Getting there is not going to be easy. We must begin today and be aware that there are challenges that need to be addressed as fast as possible. For this, we must use the capabilities of the financial system in a cooperative and innovative way. One of the great challenges that financial institutions must overcome is to channel more resources into this segment. The problem is that financial inclusion units compete against other segments' business models within the banks that have already shown profitability and currently generate most of the bank's revenue. Therefore, it is necessary that financial institutions have the vision to incorporate a long-term commitment to allow innovative models to mature and reach their full potential. In terms of regulatory challenges, we have to keep working with financial authorities around the world on the improvement of legal frameworks so that they have clear market-based incentives to decrease clients' acquisition costs and to achieve the long-term goal of broad interoperability and interconnection. The next step is to adjust the telecommunications regulatory frameworks, working hand in hand with telcos authorities in order to level the playing field for a fair access to the telecommunication channels for providing mobile financial services. In 2008, in BBVA, we started working on the implementation of a global outreach strategy centered mainly in Latin America, where we have taken a lead position in promoting recent regulatory reforms related to financial inclusion models and their implementation. The task is so important to us that we created a global financial inclusion business unit with a specialized research group to assist it. BBVA's strategic plan for financial inclusion is strongly advancing in Mexico, Colombia, and Peru, and we have also started its implementation in other countries. Our outreach strategy comprises access, usage, regulatory reforms, and financial education. All these elements have been developed using innovative thinking, which is one of our pillars. For example, being aware that financial exclusion affects not only individuals but small businesses as well, we are launching a state-of-the-art financial inclusion model for micro merchants in Mexico. We believe that this model will be easy to replicate throughout the region, and it will benefit not only the small businesses, which are commonly situated in remote places, but it will benefit the people living around them. Today, all financial institutions around the world have to take advantage of the fact that regulations are more open and new technologies are rising to incentivize private sector participants to test new business models. In this regard, we are determined to achieve the full potential that we know exists in the region. To make this happen, we need sustainable models. We have to use out-of-the-box thinking to find innovative and disruptive ways to analyze base of the pyramid clients to determine its capacity and willingness to pay for these new products. Reaching full financial inclusion won't be easy, but we have learned a lot. For instance, now we know that financial inclusion models need to reach a tipping point where they begin to be profitable. Before that, all institutions involved in the implementation of these models must learn to cooperate with each other to generate mass usage and to be patient, incorporating long-term goals in their strategies. After that, business models will be strong enough to endure competition. So, the outstanding question in my mind is, are we, as global financial institution, strong enough to endure the challenge of total financial inclusion by the year 2020? I believe we are. Thank you very much.
Thank you. Thank you, Carlos López-Moctezuma. And Imelda, Nicolas, yes, come bring us a word from the Philippines.
Each day, at least $1 billion of remittance transactions are processed across the globe as migrants send back hard-earned monies to their loved ones in home countries. The World Bank estimates that worldwide remittances may reach $550 billion in 2013 and over $700 billion by 2016. Remittances are now nearly 3 times the size of official development assistance and larger than private debt and portfolio equity floats to developing countries. They exceed the foreign exchange reserves in at least 14 developing countries. As many emerging markets are facing a weakening balance of payments, the importance of remittances as a source of foreign currency earnings is increasing. The top recipients of officially recorded remittances for 2013 are India, with $71 billion, China, $60 billion, the Philippines, $26 billion, Mexico, $22 billion, Nigeria, $21 billion, and Egypt, $20 billion. Other large recipients include Pakistan, Bangladesh, Vietnam, and Ukraine. As a percentage of GDP, however, the top recipients of remittances in 2012 were Tajikistan at 48% of GDP, Kyrgyz Republic at 31% of GDP, Lesotho and Nepal at 25% of GDP, and Moldova at 24%. In countries like the Philippines, where remittances play a very important and significant role in the economy, whether micro or macro, and where international migration is a reality, whether sending or receiving countries, I believe a multi-stakeholder approach in relation to remittances must be adopted. The Philippine Development Plan, which covers 2011 to 2016, lays down our vision for, and I quote, an inclusive financial system which provides for the evolving needs of a diverse public. It also spells out what we mean by financial inclusion and how we should look at remittances. Specifically, our Philippine Development Plan says, and I quote, policymakers will need to focus on leveraging remittances as a tool for economic development. The government can ensure that a policy environment is conducive to the use of remittances for investment in well-considered financial products and in productive activities, and implementing measures to further the flow of remittances through the financial system that would help catalyze their development role, end of quote. With the full support of the Central Bank of the Philippines, the Commission on Filipinos Overseas, which I chair, has put together the Multi-Stakeholder Remittance for Development Council. At the UN High-Level Dialogue on Migration and Development, on behalf of the Philippine government, I specifically called for the reduction of remittance costs to 5%. I reminded the Assembly that this target was set during the G8 declaration in 2009. We are making progress, and we are not alone. At that meeting, UN Secretary-General Ban Ki-moon outlined an 8-point agenda, and the cost of migration was second on that list. He decried the fact that every year, billions of remittances are withheld in unnecessarily high transaction fees. Moreover, he said that the countless migrants pay their life savings and those of their families to unethical recruiters and end up in debt bondage. Imagine what we could achieve if, with lower remittance costs, those funds are put to work for development, to send a child to school, to pay for medical visits, or to start a small business, end of quote from the UN Secretary General. And World Bank has called on governments, and I quote, to achieve the objective of a reduction of the global average cost of transferring remittances from the present 10% to 5% in 5 years through enhanced information, transparency, and competition, end of quote. Now comes the hard part. To make migration work for all, we must reduce the cost of remittances, and we must apply most of the recommendations advanced by the FI2020 Financial Capability Working Group, from providers taking responsibility to building financial capability, to governments creating and implementing cohesive national strategies to continuously improve delivery methods and scale. In this conference, we have been presented a roadmap to financial inclusion with very concrete steps to enable the financial capability of our respective constituencies, clients, and consumers. This is one area where we can help realize that goal, and I encourage you to encourage your governments to make lower costs of migration a priority. Thank you very much.
Thank you. Thank you, Imelda, Nicolas. And now, Elly Ohene-Adu. One more inspirational message.
Yeah. First of all, I would wish to applaud Beth Rhyne and her staff for this hugely successful and phenomenal conference. It is an honor to me to be able to address this eminent audience. I wish also to thank Beth and Susy and all the other Beths at CFI for not giving up in persuading me to cut short my vacation to participate. I can assure you, Beth, that I have learned a lot, and my time here has been extremely beneficial. And I think I'm speaking for everyone. Well, you've heard it all from my colleagues, the case for financial inclusion. The time has now come when we have to go back to our workplaces and knit this roadmap steps that we have so fully dissected into the fabric of our individual agendas. The discussions have provoked us all and provided a wake-up call to which we must respond. Throughout our discussions, regulators received the most bashing, or so it seemed to me. I'm coming from a tribe of regulators, and I know that regulators have a lot to do to catch up with market dynamics. I know that I have a lot of catching up to do to understand where markets are going, understand technology, products, services, models, and what have you. But I've also heard a lot of pledges around this conference, pledges of support and hand-holding for regulators and policymakers to enable them create the enabling environment that is needed and required for innovative business models to flourish in a sustainable manner. I am sure that those pledges will be fulfilled and carried through. Now, most of the time, governments typically refer to growth in the context of GDP statistics. Today, it's not fashionable to talk about GDP alone. These concepts record overall development, but they do not elicit the poor, the handicapped, and the marginalized in society and how they are coping. Thus, governments miss the opportunity to provide the means for such entities to participate in economic activities in a meaningful way and to benefit from development. So they remain poor and marginalized. I'm not a lawyer, but I wish to put it to you that the poor and underserved in our midst deserve better. In May this year, the Fletcher School at Tufts University held a conference dubbed Extreme Inclusion. The keynote address was given not by a financial expert or advocate, and not by a technology giant or an investor, but by a fine gentleman who had personally experienced the impact of exclusive policies and how it affects the lives of excluded persons. This man I'm talking about is the Reverend James Lawson, activist and principal strategist of the American Civil Rights Movement, who used to work with the legendary Martin Luther King. Reverend Lawson effectively described the frustration and humiliation they suffered under the exclusive policy of segregation and how this affected the very psyche of the excluded. He likened the situation then to the present day, where exclusive policies have robbed people of the right to live their lives with confidence and in dignity. It was very easy to draw an analogy with the effect of financial inclusion on those people who feel its pinch. Can we imagine what our lives would be if we stood in their shoes? Needless to say, he awakened a passion in everyone present to do whatever it takes to bridge the gap, uphold the dignity of every human being, and allow persons who are able to participate fully in economic activities with opportunities of access to financial services. The success of financial inclusion does not rest on regulators alone, as we have seen. Every one of us has a part to play. We should not, however, play these parts separately or as if they were separate. We must build partnerships and synergies with dedication and perseverance in order to create harmonies that can be likened to musical pieces produced by great orchestras at various concerts. And I want to say that That is why they are called concerts. They require the concerted effort of everyone. This effort I'm talking about is not limited to developing countries alone. It's a requirement for all countries around the globe. I have a sister who lives in Boonville, Missouri. I bet you don't know where Boonville is. It's a town in rural Missouri in the US. Well, though my sister has a bank account, she conducts most of her financial transactions by using cash. She makes all bill payments by check in this day and age in the US. Why? Because the cost of wire transfers are prohibitive to her, and she would have to go to the bank to get them done. She does not own a computer and therefore cannot do internet-based payments. She has a mobile phone, but there are no mobile products offered by the banks in Boonville. If there were, she doesn't know about them. And she's unable to obtain a loan for a little business she would have wished to set up. My sister lives in a developed country, but she's underserved. The time to act is now. Financial inclusion or full financial inclusion by 2020 is not an option. I think it is the option. It is critical to our shared aspirations for the future, and I believe it is possible to achieve. I have no doubt in my mind that it produces that win-win situation that is so necessary for efficient and all-round growth, which ensures that every sector, every community, every tribe, every hamlet, every person old enough and well enough is covered and included. Ladies and gentlemen, let the passion of our discussions lead us to positive action that will translate into efficient and inclusive growth. Finally, I want to say that if you are doing everything you can and things are not going well and you get depressed, go to Kenya. Thank you very much.
Thank you, Elly Ohene-Adu. I think we've got our marching orders from each of our 4 speakers. Thank you so much. On your chair, you have what we're calling a commitment card. Tony Lithgow, who chaired our working group for the Roadmap to Financial Inclusion on credit reporting, valued partner from the International Finance Corporation, said to me at the very beginning of this process, I don't want to be involved if this is just going to be another talk fest. And I can assure you that all of us who have been working for many, many, many long hours to put this event together, to help pull together the Roadmap to Financial Inclusion, to pore over the Global Findex and other data and see what trends were emerging that can inform us about the invisible market, none of us wanted this just to be a talk fest. From conversations over the past several days, I know each of you is committed to action. We had one good conversation over dinner last night, and William Durbin, I don't see where he is right now, but he was talking about, you know, forget this global forum, we need a West Africa forum. And I want to sign up to be the first to register for that. There are others who have expressed interest, and we had a wonderful conversation with some of our regulators and policymakers, and we gave them a safe space where they would not be bashed during those few minutes. And there were several really exciting ideas that emerged from that. One commitment was to go back to their countries and look at financial inclusion for persons with disabilities. Another commitment was to look at G2P, government-to-person payments, and how they could better be an on-ramp to financial inclusion. And then I know, Elly, you were talking about going back and creating a financial inclusion task force so that there would be a coordinating body across all the different ministries and entities that need to work together from a government perspective. So these are very exciting, concrete steps. What we would like you to do now is we'd like to take a couple of minutes, take your commitment card, it's a postcard. On the right-hand side, write your name and address, because we are going to mail this to you. And on the left, write one idea of something you are personally going to do to advance financial inclusion. We'll give you a couple of minutes. When you are finished, then hold up your hand, and we have staff who will be coming and collecting them. What we'd like to do is we will collect them from you so that we can read them and be inspired, not just having to go to Kenya to be inspired, but reading them ourselves, and then we will be mailing them to you later on. Francis Pelicamoyo, may I hear a few words from you, please? If you would come up here to this mic. We had hoped, as you know, we are not going to end short of time. So I think I'm just going to have 3 people comment. And I have asked Francis Pelicamoyo, who I think has done such important things in Malawi to advance financial inclusion, just to share a few words with us.
Good morning, everybody. Financial inclusion has been at our onset when we started our microfinance bank in Malawi. It was a concept then which was not very much understood. I remember the central bank governor saying that this is impossible and we are not going to allow it to happen. I had one cloud over them because I was a senior to the then governor, because I had been a governor of the central bank before. So in most cases, I pulled things below his carpet. But let me tell you what we started with. The regulators had not allowed any microfinance bank to start taking deposits. Regulators had a problem of an outreach method. Regulators wanted to inspect each and every branch that you opened because they wanted you to be bulletproof and things like that. This a microfinance bank couldn't do. So what we did was, we said that, the people we are reaching are poor. And you want to find a method of reaching them. First, for those people to trust the banking system. Secondly, for those people to say, that is my account and nobody is going to transact on it. Thirdly, I'm going to use those resources in the way I want to use them. Our target were women. In Malawi, just like a number of developing countries, including my own mother, never knew how to read and write. But she knew how to look after money. And she knew that $10 is different from $5, although she didn't go to school. So we designed a card that only the account holder would use it. It was a card that used biometric information. To the governor, he thought we were now moving away from his monetary system. But we wanted to make sure that where we go in the rural areas, where they have mistrust about banks, one thing that they should be sure is that they can use that card and they honor them to transact on that particular card. And very soon when you introduced that, this is the irony that we had. We didn't want to be lending to them, no. We wanted them to save their money, to open savings accounts. And believe you me, since the account holders knew that they were the only ones who were going to transact on that particular account, we had a lot of women opening savings accounts. The irony was, a woman could come and say, I want an account which my husband even cannot touch. And because of the biometric system, indeed, the husband couldn't touch. This empowered the women. This empowered the marginalized section of the community in Malawi to start business and start a lot of things. Even our ATMs were not using PIN codes, they were using fingerprints. So even on the ATM, if you went there, slotted your card, the scanner would choose any of the 10 fingers. It was not systematic, would choose any. And if you're not the right one, if you're not the right holder, then the ATM is going to swallow the card. And once it has swallowed the card, for you to get another one, you have to explain how did you lose it. But what was even more important, the women who perhaps had not even a box to keep the card, if they lose it, they didn't even care because they said, anybody who picks that card is not going to transact on my account. So why should I bother? Just go back and get another one. But all that I'm trying to stress is that in financial inclusion, one of the things that we should also consider seriously is empowering our clients. That saved us well. And if you go to Malawi now, there are a lot of women businessmen, and some of them even doing business in Hong Kong, starting from very humble origins, because we empowered them using this particular method. And we are going to continue now, because now we're using mobile money. They don't have to go to China now with travel checks or what, they're just using mobile money. We went to Kenya, not when we were depressed, but when we were happy. Thank you.
When you have a chance to sit down and hear the long version of what Francis has done, you will be very blessed in his role as former governor of the Central Bank of Malawi, and then his role as now chair of many Opportunity International Partners around Africa. He's done it all. Very quickly, David Porteous, are you close by? Could I just have a minute of your thoughts? I just can't bear to have the Global Forum end without hearing from David Porteous for a moment.
Susy, I must firstly just echo the thanks and the congratulations that many have already made to you and the team for convening a powerful event. One comment that's linked to my commitment that I just filled out on that card. You know, we've been in a season of a lot of global activity that really goes back almost a decade, the UN Year of Microcredit. Some of you were there and you remember that. We're in a season of setting targets. This conference has been about that. But the front lines of inclusion are inevitably local. They're in local, robust ecosystems. And while I, for example, agree that Kenya is an antidepressant, I think there would be people who would say it's maybe not yet fully there as the robust ecosystem that we would like to see. And so my personal commitment, and linked to being a small specialist firm, was to seek more robust presence in a few chosen markets where we can see progress on the front lines towards this robust confluence of client, provider, and regulator. And my modest suggestion would be, while we get to universal inclusion, I think that's a great thing, even if we had 5 more countries which really do have robust, healthy ecosystems by 2020, that would be an enormous contribution and would make the achievement of the full goal inevitable. Thank you.
Thank you, David. Larry Reed, are you in the audience? Is Larry here? Larry Reed is the CEO of the Microcredit Summit campaign and just came from a very successful meeting in Manila. Larry, do you have 1 minute for us?
Yes, and I have to, having just been through a summit, I have to echo the thanks to you and to the Beths and all the others that put this together. This has been a terrific event. At our summit in the Philippines, we knew this was upcoming, and we talked about what message we wanted to give to all of you. And our message is this: we want to work with you to accomplish full financial inclusion by 2020 because we see it as an important part of an even bigger goal, which President Jim Kim of the World Bank has stated is ending extreme poverty by 2030. And to do that, we need to get to full financial inclusion. And so our commitment, as the thousands of organizations involved in the Microcredit Summit campaign, is to help make sure financial inclusion reaches and empowers the extremely poor. And so first, we commit to putting the extreme poor first. This was the message we adopted at the summit 2 weeks ago. Their voices must be heard in our movement, and they must be full participants in the process of improving our services and their lives. They are not only our clients, but also our biggest resources and our best advocates. In order to better reach and serve the poorest and most vulnerable populations, we will ensure that we include marginalized groups like the elderly, children, disabled, refugees, and the LGBT communities. And so our commitment is to work with you to make sure that financial inclusion reaches to the farthest end. Because if we can get models that work there, then we have models that work efficiently throughout the system and will build financial inclusion for all. Thank you.
Thank you, Larry Reed. And now it is my distinct pleasure to invite Pamela Flaherty to come and offer closing reflections. CEO of the Citi Foundation. We would not be here today without the Citi Foundation. Thank you, Pam.
I want to thank Susy and Beth and the Center for Financial Inclusion team and Accion for for leading all of us to where we are today. I also want to thank our partners, Visa, MasterCard, the Gates Foundation, MetLife, and Western Union, and others. And I think their common support for this gathering is indicative not just of support for the gathering per se, but a recognition that this really is a job for a diverse set of actors. I also want to remind all of us that we're congratulating Beth and Susy and Accion and the Center for Financial Inclusion for convening this group. But the whole effort is about much more than just convening here today. There's been 18 months or more of work on this roadmap. And we had a lot of discussion about what is a roadmap when you have so many different actors who are in many ways doing their own thing, pursuing commercial objectives, etc. But I think the importance of the roadmap is that this is not the how-to, but this is a reminder of the important elements that need to be included as we look to full financial inclusion. And I think we received a little word of caution when one of the panels was asked to forecast things that they thought might happen in the future. And the biggest applause from you in the audience was from Sendel's prediction that there was going to be a run on the bank somewhere, and this is going to be a big problem for the financial inclusion industry. And I think it's a reminder that the elements of the roadmap, which included consumer protection and listening to customer needs and financial capability, et cetera, are all important things that we need to make sure are included in these new models. I think we learned and talked a lot about innovation over the course of the last 3 days. I think we all know that the standard models are not going to cut it. I would say that we probably don't know the degree of change that is going to come. And I loved Anil's comment about this is going to be disruptive change, not incremental change. And it's probably going to make many of us in this room feel quite uncomfortable about our world and the world around us and how our role needs to evolve to accommodate them. I think the private sector, we've heard, has a huge role to play in this. And there's an important dialogue that needs to take place between regulators and the private sector to ensure both consumer protection and financial capability, and to ensure that those two things are complementary. I think we've also heard a lot about partnership and dialogue between our microfinance institutions, the NGOs, the agent companies, the communications, the banks, et cetera, all these different actors, not to mention the venture capitalists who are transforming markets. And I think we're going to see all kinds of new partnerships that are great opportunities for us, but again, great challenges. And as I think Nick Hughes reminded us, with low-income people and low margins, we're going to have to be very mindful of the challenge of achieving scale. I think we know that countries can learn from each other, regulators, central banks, NGOs, the private sector, but each country needs to look at its own roadmap and understand how do they create rules that will enable innovation and collaboration to flourish. And in many ways, we've heard, we keep talking about if you want to feel excited, think about Kenya. And in many ways, you could argue that the developed markets are the ones that have handicaps in this race to financial inclusion, because we have all the legacy systems, the legacy regulations, all of those sorts of things, the embedded costs in an old system, and that's very true. But the fact is, we also do see some innovation happening in some of the developed markets as well. And we had a breakout session where we talked about, we had several very interesting panelists talking about what was happening in the US and the UK. And I think that there's a lot of learning that can take place. This is not, developing countries, emerging markets are not the only ones that have the financially excluded. Developed markets have them too, and we can learn from each other. I do think I would be remiss if I didn't remind all of us that this has been a wake-up call to acknowledge the importance of including women and the disabled as we move forward. I did happen to note that I think only 3 of 22 breakout leaders were women. I don't quite know how that happened. I accept some responsibility for that. And that although we had a few panels that were all men, I didn't notice any panels that were all women. Let me assure you that when we all meet 7 years from now to celebrate achieving financial inclusion, that will not be the case. And this will be a celebration, and I think it will include all of us here today, but many other actors that we may not even thought of. So let me thank you again for joining us, not just today, but on the journey forward. Thank you very much.
We're almost at the end. Just about to be ready to say thank you all and to name every one of you who has participated, but I do want to say a couple things first. We've been talking in this session a lot about commitment, and commitment has been one of the things that we had wanted to achieve with this Financial Inclusion 2020 conference and movement. But the other thing that we had wanted to achieve was community. And I think that one of the things that you see here is the beginning of a nascent community. And it's a community that has more diversity in terms of the types of stakeholders who are here and talking with each other than many of the conversations that have taken place in the past about financial inclusion. So if there's one thing that I hope we've managed to begin, it's that. And I do think that there are many of the examples that I wanted to bring, and now I don't have much time to do that, but I've seen communities beginning with many of the people getting together in ways that are new, or coming up with ideas about ways to be connecting with each other that are new. For example, leveraging small groups to go global. Pina said the Canadian Banking Forum on Assistive Technology could take that knowledge and that advocacy global. Steve Kehoe of Visa talked about leveraging a small group of people who are committed to responsible finance and making that go global. And I think when we look at who's the community, we've got the stakeholders here, but there's one stakeholder group that's quite underrepresented, and that's consumers. And I think we've talked a lot today about how to increase the consumer voice. This morning, Justin McMillan was talking about ways to include, of Consumers International, was talking about ways to include a consumer voice in the dialogue that takes place going forward. And I don't want to be Pollyanna-ish about what a community is, because we recognize that there are competing models that are vying for business success within this framework, and there may be some winners and some losers, although overall I think it's a win-win. And that may at times cause stress in this community, but I think that because we have this dedication to a bigger goal, we can continue to have a productive dialogue even when those stresses are in place. And I hope that the roadmap is a vehicle that will help you all do that. And I was very happy to hear Imelda Nicolas, who said, with this roadmap, I can go back to my country and say, okay, here's what we need to do. There needs to be political will among government and the private sector. And so we hope that you all will be willing and able to use the roadmap to increase the political will for those next circle out of people that you need to be influencing in order to take action. So I wanted to just end by saying we have some commitments to you and some requests. So our commitment to you is that we'll continue to stay in touch and maintain this as a community. We will consolidate the learning that we've gotten over the past 3 days and send it back to you so that you can use it. And we'll continue to monitor progress towards financial inclusion. Our request to you, and we're really excited about the commitments that we're seeing, but our request to you is to take the ideas that you've gotten today home and apply them. Follow up with the new relationships that you have formed, and let us know how you're doing.
I get to help with the wrap-up and just thank some of the many, many numbers of people involved in pulling something like this off. It was more than a conference. It's the beginning of a movement, and it takes many, many people to pull that together. So we want to ask you to stand and stay standing when we acknowledge you, and Beth will start.
Well, I'll start with the Steering Committee of the Financial Inclusion 2020 Project. Shamshad Akhtar of the United Nations, who unfortunately couldn't be with us, Patricia Devereaux of MasterCard Worldwide, Jason Lamb of the Gates Foundation, Graham McMillan, Citi Foundation, Doug Sabo of Visa, and Evelyn Stark of MetLife Foundation.
And thank you to our sponsors, Citi Foundation, Visa, MasterCard Worldwide, the Bill and Melinda. You're supposed to stand and stay standing.
Stand up. Sophia, you're sitting down. Stand up.
There you go.
Sophia.
So Citi Foundation, Visa, MasterCard Worldwide, the Bill and Melinda Gates Foundation, Western Union Foundation, the MetLife Foundation, Credit Suisse, Financial Times, and our global forum partners, the Omidyar Network, McGraw-Hill, and the Global Forum supporters, Access Bank, Barclays, the IDB, Bluebird, American Express, Deutsche Bank, Moody's Analytics, and JP Morgan. You're all supposed to be standing.
Stand up. I'd like to thank
There you go.
No, don't sit down, don't sit down, don't sit down. We're all going to be standing. Thank the roadmap chairs, Jasmine Thomas, Alexia Latortu, Bill Gaija, Tony Lithgow, and David Grace, who was co-chair with me.
And thank you to all of the dedicated working group members, the outreach partners, and everyone who commented on the roadmaps. Please stand. We're not doing so well on the standing. And thank you to our speakers, our moderators, our panelists, and the breakout roundtable session leaders.
Stand. If your name has been called, stand up.
We're begging up here.
So I would also like to acknowledge the staff of the Center for Financial Inclusion and Accion, who work incredibly hard. And of course, I need to begin with Susy. Come on, Susy.
Susy, you have to stand.
Susy, I'd like them to come up so that you can all really see them, because they have been working in the background. Emily Ackley, Marini Batzio, Elizabeth Davidson, Anita Gardeva, Sonia Kelly, Amanda Lutz, and Adriana Magnus.
And others.
And I want you to see women.
There you go. And others at the CFI and Accion: Allison Bernstein, Beth Houle, Neil Kennedy, Bruce McDonald, Andrea Snyder, and Eric Zolke.
We also want to thank Linder and Associates, which our event, what do you call it, producer, that has managed every aspect of the experience that you've had while you've been here, and to Brunswick Group, our PR consultants, and everyone else who intends to work to advance financial inclusion. Thank you.
There you go. There you go. Thank you all so much for taking the time to join us here and join us on this journey. It's been a thrilling conference, and as I said, it's more than a conference. It's the beginning of a movement. So thank you all for coming. Very good.